Hi, everybody. Welcome to NFTs, the next creative renaissance, hosted by BitGo and co-hosted by Parallel Finance. I'm your moderator, Aaron Leibowitz. Let's pass it on to Joe Kinney to do an introduction.
Hi, everyone. Thanks for joining us today. My name is Joe Kinney. I'm a product manager here at BitGo on the Web3 and DeFi teams. I helped ship NFT wallets this past half.
And Sumit.
Hey everyone, it's Sumit here. I work at Parallel Finance on the product team. I'm really excited to talk about NFTs, something I've been working on over the past couple of years. Also to touch on our new NFT financialization platform called Paraspace Protocol. But yeah, really excited to talk a lot about NFTs today.
Awesome. Why don't we go ahead and also introduce our companies? Joe, you want to start with BitGo?
Yeah, absolutely. So as I'm sure some of you are familiar, BitGo is a custodian for digital assets. We offer cold storage under qualified custody, so regulated entity cold storage. We also offer programmatic hot wallets, which are quicker to effectuate transactions, interoperable with DeFi protocols, NFT protocols throughout the blockchain ecosystem. We also offer financial services, that is trading, borrowing, lending, kind of have the full stack there. And as the company expands and grows, we're dipping our toe further and further into the Web3 space and really excited to be able to offer NFT services and partner and collaborate with Parallel Finance on this talk.
Thank you. And Sumit on Parallel.
Yeah, so Parallel Finance is one of the new up-and-coming players in Web3. We actually launched in early 2021, and we're really focused on DeFi. So our products are based off of completely smart contracts. We launched in early 2021 on the Polkadot ecosystem. And our goal is to bring DeFi to 1 billion people. We've achieved some good things on the Polkadot and Kusama, it's called the Dotsama ecosystem. We were the highest TVL DeFi platform on that Dotsama ecosystem. We have a suite of DeFi products that are live today on Parallel.fi. You can check that out. Some of the things that we are doing is liquid staking. We support parallel crowd loans. We have an automated money market. We also have a decentralized lending borrow solution, and we're working on a stream protocol. What I am working on in particular is something that's happening on the EVM side, on the Ethereum side, which is the NFT financialization platform. And that's what Paraspace is. And the idea is that you can lend and borrow against your NFT assets and do things like trade on credit, rent, all sorts of different things that we see that this new space of NFTs is going to be essential for the space to keep it growing.
That's awesome. NFT finance is a super exciting sort of part of this industry today. And that idea of renting NFTs is actually super cool as well for all these NFTs that give access to specific events and things like that. But we'll get into more of that as we continue. So let's talk about today's agenda. We've gone through what our companies do. Let's talk about, is it just a JPEG? After that, we'll go through use cases of NFTs, institutional and retail, what's happening in the market, future uses, how to protect your NFTs, and of course, a Q&A section. So let's dive in here. Is it just a JPEG? I think everyone on this panel can agree that's a no. Where do we want to kick this off, guys? Joe, you want to?
Yeah, I'm happy to take this one and kind of start off and then hand it over to Sumit. I think, a lot of the focus, even internally at BitGo, in terms of onboarding our first customers or thinking about, vetting collections, improving collections for qualified custody, making sure that we're regulatory compliant. And then also from a product perspective, just in terms of what we want to offer users out of our UI, the features we want to offer, it's been very focused, or was very focused initially on this collectibles, NFTs as a profile pic, NFTs as art concept. And, as panelists, we kind of discussed this before, and we wanted to level set before jumping into the discussion, because even though today NFTs are extremely useful in that regard, And it's exciting to think about how far the NFT ecosystem has come in that regard today. NFTs are also useful for a variety of other things. And really what an NFT is not a JPEG. It's really a legal primitive that's more similar to like a timestamp or a legal contract that is timestamped. So you could think about, for example, a real estate title that exists in, a bank vault or, some like normal traditional custodian vault within the real world. That's actually very similar to how an NFT functions on the blockchain. And I think, what's innovative about NFTs is not the fact that you can attach arbitrary metadata to them. That is a characteristic and that makes them useful. What's innovative about NFTs is that you have an immutable log of events, an immutable log of timestamps that's verified by distributed consensus, and it doesn't require some centralized authority or some third party that's wielding a big stick, for example, a military or a police force, to enforce that. So you can think about property rights, and not to get too high level here, but typically property rights are enforced by a standing military or a police force or some form of violence. And even though you have that sheet of paper that says that you own a house or says that you own something, the only reason that continues to have validity is because someone is standing behind you with a gun, metaphorically speaking. And I think in the case of NFTs, there's no one standing behind you with a gun. There's just a network of computers that is spread out that is verifying this chain of events. And each event in the chain is dependent on others having been verified and futures being verified in the immutable log. And so it's like fundamentally a reworking of how we think about, legal primitives. And I'll hand it over to Sumit if he wants.
Yeah, no, I think that's an awesome explanation. And just like the way I like to think about it too is it's like, what is it? It's a non-fungible token. And then what's the opposite? Like a fungible token. So, that's like Bitcoin is the first fungible token that kind of started this whole industry of digital assets. And non-fungible just means something that you can't exchange one-to-one with, like one Bitcoin doesn't have any difference than another Bitcoin. One Ether doesn't have another difference than another Ether. NFTs are completely unique. And there's different standards based on different protocols of what classifies a fungible versus an NFT. And that's kind of the way I look at it. It's just like anything that can be tokenized. And there is a whole lot of use cases. That what we've seen today, we've seen like the collectibles, the art, and even just seeing the progression, like it's been only like since January 2021 has this really blown up. But some of even the art and collectibles, like the Bored Apes or the doodles, they have essentially raised money and there's value in them. And now they're building other things on top of it. But it's just like an example of like having these tokens, having them value, having something that's a digital object. As Joe talked about, a lot of like the real estate assets or someone behind it, you have a piece of paper. This is actually just bringing it to a digital ownership. And then also because it's code by nature, like we're all shipping code as part of like the products and solutions we are developing. Because it's code, you can actually program these NFTs to do a lot of different things, and eliminate some of the friction that we do see in traditional financial markets. And that's why I'm super excited about it, because it's just like, it's non-fungible. That opens the surface area beyond just, like a currency or a fungible token. There's a huge surface area where NFTs can cover. And the fact that it is like a programmable thing, now you can build like even new interesting financial products or just products in general off of it.
Absolutely. So let's dive into some of those use cases. Talking about ownership of digital assets is something that we sort of started to touch on art, but we didn't get into music or videos here. These really aren't different use cases, but I think they've really expanded over the past few months, especially music NFTs significantly. Somebody want to dive into that? Let's start by explaining what are music NFTs, how do they work, and then we can dive into some of the current use cases.
Absolutely. I can jump in here. So with respect to music NFTs, video NFTs, they function very similarly to art NFTs. So in the same way where Board API Club, the NFTs actually link. They have pointers. The contracts themselves include pointers within the contracts from the token IDs to off-chain stores of data. And so in the case of Board API Club, the off-chain data is an image, and the pointer points to an image. It points to a unique image. And if you own that pointer inside of the NFT contract, you own the image on the blockchain. So similar to how that functions, a lot of royalty NFTs for music or video actually point to different data stores. So music data stores, video data stores, off-chain, and point to that information. So it's very similar. So in the same way that you can own a Board API Club instance, you can also own an example of a song, or partially own an example of a song. I think what's really interesting here are two components. So the first component is that you can build royalty payments into NFTs. And so essentially, and there's multiple ways this can function, but one way that this can function is, a musician who's trying to raise money for an album could theoretically create an NFT collection, have that NFT collection own the album, and then raise money to fund additional collections, additional albums, or actually raise money to produce that album itself by offering a royalty to investors. And every time that NFT collection is sold, or those songs are sold to other people, that ownership is moved around, those original investors will get paid. Another component here that's kind of interesting to think about is you could actually fractionalize ownership of musicians or fractionalize ownership of songs. So this has been spoken about a lot in terms of tokenization. So if Taylor Swift, for example, IPO'd herself on the blockchain with a token, launched Taylor Coin, and then essentially revenues associated with, viewing her music or listening to her music, if that value somehow accrued to the token, it could work that way. You can also fractionalize ownership using NFTs. So if Taylor Swift puts out a new song, you fractionalize it into ownership of that into 20 separate NFTs. And then those all can be, bought and sold. And so I think in the context of art, music, video, people speak about this frequently. It's well understood that it's very democratizing and favors, newer artists, and allows artists to be more directly paid for their work, and also allows for greater financialization of these asset classes.
Fantastic.
Yeah, and just to add on that, I think that's one of the reasons why that these use cases have really picked up, because these create creative types, artists, musicians, film or video. The way that some of the services on the Web2 side, if you will, have progressed, they're not really benefiting too much anymore. So they're creating content, and they're not really making too much just from the listens. Musicians, for example, make a lot of their money from going on tour, selling merch. So these all represent new opportunities for these artists to connect directly with their fans. And their fans also have a stake in basically with all these things that are being developed: fractionalization, royalties. You see that a lot in art today. So a lot of artists that were going on different mediums, or maybe they were doing some kind of code-based art called generative art before blockchain. Blockchain kind of and NFTs kind of fit really well and give them the opportunity to fund themselves and create. And I think that's that aspect is something that has really picked up pretty early on. I think that's something that's been really interesting in that particular use case.
I want to highlight,
and not to.
I want to highlight that this actually is not theoretical. This is happening today. You have NFT platforms out there where big artists are fractionalizing royalty in order to fund their next album creation. It's been really amazing to see the adoption of this, as Sumit was just talking about. Go.
Yeah, absolutely. And not to plug BitGo here, but those platforms are, currently evaluating our some are evaluating our storage, and this is a way, and also so to the Parallel.fi application, to pull it back, these NFTs can be stored in BitGo securely. They can be, essentially borrowed against through Parallel.fi. And so that speaks to the interoperability component here. They're already, the infrastructures, they kind of the interoperability protocol is written. And so all you have to do to participate in the system is just adhere to it. And it's really frictionless. There's a lot of permissionlessness. And then also, just to jump off of the concert thing, I think another way that NFTs can be used to jump to events and ticketing and documentation like if you were to go to a concert, you could actually have NFTs that represent the tickets to the concert, or be dropped NFTs that are kind of like mementos of going to the concert. And so that is an additional way for artists to interact with their fan base, or musicians to interact with their fan base, and basically like give mementos, distribute ticketing, distribute other things through the NFT medium.
Absolutely. Should we start talking about identity? It really starts with the fact that most of our identity data today is not owned by us. If you think about healthcare records, they're stored with your physician, with the hospital, wherever you might be getting your health work done. You don't own that. They transfer it for you from one doctor to another. It's a pretty interesting idea that, well, we don't own our data. And the idea that NFT representing identity information can actually allow us to take back ownership of that data and only share it with whoever it's relevant to is very exciting, especially in the data privacy sector.
Yeah, I tell you a little bit what I think. I mean, you see the problem today. Like a lot of the systems that we interact with online or offline, we authenticate into some kind of server, right? So we're providing our email and password. And that server is owned by some central counterparty. Maybe it's Twitter, maybe it's Facebook, etc. And we've seen that, it's really comes down to security. Is like, how safe is that? How well secured is it? And there's definitely been some incidents where someone can hack into it and steal your data. And it's amazing what you can do with just like a name, or like an address, or a name and a birth date or something. You can create a credit card. There's a lot of things you can do. And unfortunately, it's just these kind of things are happening more and more. And I think this is like one of the benefits of Web3, is you are owning the keys, and there's good solutions for you. Like BitGo has lots of really good solutions for how to manage your keys securely. You own your keys, and in your keys, you can store like basically details about your identity. It could be your name, your birth date, some of your interests, some of the people you interact with, like a social graph. And that can be something that's tokenized, and you can, share that token or use that token to authenticate, rather than having that information on a centralized server. It's more on the distributed ledger. There could be some stuff that's obfuscated. There could be certain ways that these identity cards are developed, where only you select which pieces of information are shared depending on the site that you're interacting with, or the platform that you're interacting with. So it's definitely like a really like big problem, and something that is one of the issues with the internet today. So it's something that's like, I think I know it's being in the works. There's lots of discussion happening within the space, but I think it's something that we probably will see within the next few years really popping up, and like a better solution to handling identity and safekeeping that sensitive information.
I think the healthcare record is like a great example of something where it should be interoperable, but it's not. And there are like three big companies, at least in the US, like domestically, I'm based in the US, and I know that there are like a couple big companies that essentially own all the healthcare data, but they don't share it with each other. And I also know that my healthcare data from when I was a kid, like I don't even have access to that anymore because I'm not with the same like pediatrician or whatever. And I think, there's an incentive structure around maintaining that siloing. And so it's very interesting. I think like the technology right now today exists through NFTs, through blockchain, to actually put all of that on chain and make it interoperable. And I think the question in my mind, it's like a social engineering question, is how do you incentivize these big parties to do it? Something interesting was announced today, actually. The EU is announcing that they are, compelling all social media protocols, messaging apps to basically adhere to an interoperable standard, make it easy for people to get off the platform just as easy as to get on, make it easy to message across platforms. And I think to the degree that that is extended to something like healthcare, or that the US or other countries were to institute something like that, it would be really powerful, and is actually a catalyst, a major positive catalyst and tailwind to blockchain adoption. So I think on the matter of healthcare records, really excited to see how that evolves, and interested to see if it happens organically because of natural market forces, or if it requires some sort of central authority stepping in and mandating it in the way that the EU mandated interoperability of social media.
It's a really good point. I actually first heard of this healthcare identity ownership back in 2016 or 17. The MIT blockchain lab put out a great white paper on it, and I tried to follow and ask the people who wrote it, hey, what are you doing with this? Where is it going? And they were like, we're too early. We haven't done anything with this. The market's not ready for it. Love to see those guys at least come back and address the problem. See where we are today.
Secretly, they were like, oh, like those 3 companies actually cut us $10,000 each to shut up and stop thinking of.
Imagine.
Just kidding.
Documentation, I think, really does fall in the same line of identity here. We sort of touched on both of these. So I want to jump down towards gaming, which is an absolutely massive industry today. I mean, in 2020 alone, beyond just purchasing the video games themselves, there were $54 billion spent on in-game purchases. And the crazy thing about this for the users, once you've purchased something in-game, most of these games, be it Fortnite or Minecraft or whatever else, you are not able to remonetize that. You can't sell that back to a market within the game or anything. And if you get bored of the game, all of that money you've spent in game is now just gone. It's useless to you. With NFTs being in-game assets, or in-game assets being NFTs, I should say, the idea of remonetization of these assets, whether you get bored of this specific skin or whatever it is, or if you get bored of the game as a whole, you can swap all of your in-game assets out for ETH and go on to the next game and spend it in that game is a really exciting prospect. But again, the incentive structure for these major gaming companies is that they'll get less revenue in this model. So we're seeing a lot of these more indie gaming developers start on the blockchain and start using this model and trying to gain adoption by creating more value for the users through this. There are quite a few of these companies today, both in the gaming side and NFT platforms. In fact, we've even seen GameStop launch their own wallet, and they're launching their own NFT marketplace specifically for gaming assets. You guys have any thoughts on the future of that side of the industry?
Yeah. It's very interesting, the gaming space. Like the game I used to play is like a kind of like I think it's like an MMORPG, massive online role-playing game, Diablo. And the idea is like you have like this character, and you go around and you kill monsters and you like kill bosses and you get to like higher levels. And in order to do that, you have to like pick up equipment, buy equipment, weapons, armor, etc. And if you have the best equipment, then your like characters are the most powerful, and you can really be competitive on multiplayer. Just go through the story mode. And one of the things that, this game is super popular. Diablo is like a very successful game, and there's a lot of other games, similar games like that, World of Warcraft, etc. One of the things that in the gaming space is, wouldn't it be a lot better for the player, the gamer, the player to, actually own this asset? So like you said, Aaron, like once, they are done playing the game, they can actually, like, all that time they put in, all that money they've spent, it just doesn't go out the door once they've beat the game or they're like tired of playing it. And that would just be like kind of a much better experience towards a game. I see that happening. It takes a lot of time. And also like gaming interoperability. Like you can, as someone said in the chat, you can take that weapon to another game that's made by maybe the same studio or like whoever wants to build on that. Or you could like, just sell that item as well, just the financial aspect. So these are things I think studios are working on. They're definitely working on these titles. It just takes time to build a game. It's a really successful game. It takes time. There's another model of games like this play. It used to be called play to earn, and now people are transitioning to play and earn. And the idea there, it's almost like a DeFi product to me, more than a game. The idea there is like you have an NFT in order to play the game, and then by playing the game, you win some tokens, and then you can sell those tokens. And if you're good and you have the right strategy, you can make some money from playing the game. And the the call out there for gamers is that these games aren't really games. Like they're just kind of like, they're not that fun to play. And they kind of make use of the different macroeconomic environments. Like maybe if you're in a country with where the purchasing power of your currency is not so high, you can use like something that's denominated in ether or some other asset, and you can like make enough money. And those games like end up like struggling because there's not enough natural demand for people to play games. So this, I kind of view it as like maybe like a totally new type of game and a new type of product. And maybe there is some games that can be developed that are play and earn games that actually have some genuine demand, and people actually want to play these games, and they can actually like make money from these games. So these are like two categories of games, but it's definitely a hot space. Some things that we're trying to do in terms of on Parallel is, a lot of times, like in order to like play some of these play and earn games, you need to get access to an expensive NFT. So opening up rental markets, so certain holders will have, or maybe people with more capital will have these NFTs, and they want to earn some rental income. And that's something we see as a potential use case as we're monitoring this space. And that's an aspect that we're working on, is like the rental economy. I think gaming is a great use case for like that rental aspect.
Just to jump off of this, 2 points. So that rental aspect, I mean, it's just like Rent the Runway, but for games, right? And whether or not you're renting skins or you're renting weapons, like there are business models that exist that are identical and frankly are more costly and have additional friction. So this will exist, this will work, it will be a business. And so I'm excited to see the Parallel.finance business grow there. Excited to see what other applications pop up. I think the other thing that's interesting to me with gaming is, like, we talk about like buying skins, and obviously people, buy skins already just for their own pleasure, even though they're not interoperable, and even though it is, right click save, right? So the whole like mantra of like, oh, it's just a JPEG. It's like, well, yeah, skins are just JPEGs also, and people buy them. But then additionally, you could imagine a world where you own an NFT that represents, a character in a game, or like partial ownership of a character in a game, or just represents the fact that you bought that character. So take a game called League of Legends, for example. There's a character in League of Legends, like the game, called Jinx. If you had owned that character, right, then maybe when Arcane, the Netflix show, comes out, features Jinx, and now has IP rights that are extremely valuable. It's a high quality show. I watched it. It's great, right? Like maybe you, as a player who played League of Legends 7 years ago, owned Jinx in the game, now get paid off of like some like Netflix deal that Netflix has with League of Legends, right? And I think like this is really exciting to me, because essentially what it means is that as a user of a game or a user of these, virtual items, you actually could get paid on the IP rights in the future. Someone who's talking about this today, actually, a company that's talking about this is the Eternal Dragons, the team behind Eternal Dragons on Solana. They're talking about a roadmap that includes, licensing IP rights for dragons in the game. And if you hold a dragon that's featured in a TV show or movie, you'll get paid for that. And I mean, to me, that is, that's the ultimate financialization. That's the ultimate end to end. And that is the democratization of, digital ownership. So like, not only does playing Jinx become fun and you want to play Jinx because you like her attacks and her attack style, but also you get paid down the line because you picked a character that ended up featuring in a Netflix show that was really positively received. So excited to see how this evolves personally, and just think there's a lot more here than people really understand.
Absolutely. I totally agree with that. I do want to say, I think we have 3 gamers on the panel, so I don't want to spend all of our time on gaming. Let's move on for now. There are a few questions in the chat about gaming we'll come back to during Q&A at the end. Let's talk about membership clubs and events and ticketing. So I'm going to kick off membership clubs by saying I actually own an NFT that gives me access to a chef's pop-up events. Anytime he has a pop-up, the food is free, access I have indefinitely. And he's already hosted probably 10 of these across the country. I've been to 2 or 3 personally. It's really cool for me because, especially with this rental model of NFTs we're talking about, when there's one in Miami or Vegas where I'm not going to be in that city, I can rent it to somebody in that city who wants to go to the event that I wouldn't be going to anyway. And now I'm earning off of this NFT where I wasn't going to make use of it and it was going to go to waste anyway. more than that, I can sell the NFT and have sold my membership in this club. I don't know of any other private clubs, especially non-blockchain based, where I'm able to sell my membership without going to the club itself saying, hey, I'd like to transfer my membership. And they'd be like, no, why would just have your friend apply? If you don't want your membership anymore, you can stop paying, but you can't just give it to somebody. So it's a pretty exciting movement that we can decentralize the sort of intermediaries here and, well, allow better use cases for the end user.
A few points on this, and I just want to expand. I completely agree, and I think membership is also something that's underappreciated. So not only can you like revoke ownership of NFTs arbitrarily, so you could actually have like a time window, like you own this NFT for a year, and then after a year, this address no longer owns that NFT. Like you could actually build that and like have, you know, the traditional type of membership NFT and mirror that exactly. Or you could have the membership similar to Aaron here, right? What I think is really cool about the membership concept that Aaron's speaking about is that in a lot of cases, you can actually like, you know, build like a discounted cash flow model of the value of these memberships and then value the memberships themselves. I'll give you an example. The permissionless conference in West Palm Beach, it's like very DeFi centric, but there's an NFT called a Permi. It gives you access to the permissionless conference every year, VIP indefinitely, and also access to the research. The research is $2,500 a year, and the permissionless conference VIP ticket was $1,200 this last year. So you could literally say, like, this is going to be minimum $3,200 per year going forward to perpetuity. Apply, you know, whatever it is you want to apply, like a 10% discount rate, 15% discount rate. Obviously, there's going to be some like basis risk between ETH and dollars, but you're buying it in ETH today, so you can convert that to dollars and essentially come up with a cash flow multiple for, you know, what that membership is worth. And then, you know, discount the future cash flows based on a traditional discount rate plus like an extra premium for how likely it is you think they'll continue doing it and definitely continue the conference. And so this opens up a whole world of financial analysts, investing strategies around identifying alpha and underpriced like memberships and then renting them out. And it just leads to, I mean, this will lead to greater efficiency of pricing and greater efficiency of use of membership and use of assets like this, which is, I mean, also like very, very differentiated. This doesn't exist today.
Yeah. And just to add on, like from the clubs themselves or like the club owners, like this is like a new way for them to like, you know, really get the most out of their members because, you know, membership today, people, they do like, you know, get the dues or whatever based off of like being part of the team, the community aspect. But when you have this concept of like, these are owners and these owners have their own incentives that are financial, now this is an even stronger community. So that club is even more powerful. Like you see that a lot in some of the alpha clubs that exist today. You know, I don't know if you guys know some of the Proof Collective projects, but Proof Collective has their own like alpha group for like NFTs. Like it's mostly art and collectible focus, and those are pretty expensive. Like I think like around 80 Ether. But then also even like their PFP project is like it's like kind of like a pseudo membership. It's like a gated Discord, like a gated community. So there is also an incentive for clubs and creators, not only on like the second taking a cut of the secondary sales, like the first one that we talked about, the artists and musicians, but it does strengthen the community and strengthen the potential value that they can earn. And even within these membership clubs, it doesn't mean that, you know, this is like one time for them to earn revenue. Like there's other opportunities for them to earn revenue. So I feel like this is like almost like a no-brainer, like a very simple one to understand, and something that, you know, we'll continue to see different groups, different groups of people like establish their own memberships and communities, and those communities like really strengthening and adding lots of value and fun experiences.
Absolutely. So I want to touch on events and ticketing quickly, but move on to what the NFT market today looks like. So events and ticketing, one of the big issues is counterfeit ticketing being sold across different platforms. As we said, an NFT is a timestamp, a verified timestamp on a blockchain. Using blockchain-based ticketing, there will be no way to counterfeit tickets. You'll be able to verify them on-chain before you show up to the event. Should you have bought a ticket and you want to know, hey, I want to make sure this is legit, I bought it on a third party, I bought it from some guy on Reddit, let me just double check, I can go and check right away. I went to a concert last night. I wouldn't have been able to check ahead of time that my ticket was real. I activated a QR code and walked up to the door, and the guy scanned it. If it scanned and said it was a false ticket, I would have been like, crap, well, I'm here already. This sucks. Yeah. So very niche but important use case is this inability to counterfeit on-chain, ability to verify quickly. So let's move on here. Let's talk about what's happening in the market today. From trading to financialization, creation platforms. Joe, do you want to kick us off?
Yeah, definitely. I'll take creation platforms, and then maybe Sumit, you can take the other two. I think mainly my exposure to this today and what I'm really focused on right now is thinking about how you can either, create, develop a solution for individuals to custom create their own NFT collections, or create NFT collections where individuals can custom create NFTs within those collections to serve for a particular use case. So I'll give an example. There are, on OpenSea, you have the option to create. There are some other companies that give you the option to create. There's nothing specifically focused on, legal arbitration or, court summons. You can envision a world where you actually can summon individuals directly using their public blockchain address by just dropping them an NFT. You could drop the NFT, have a link to metadata. When you click on the metadata link, it shows you the documentation, right? So instead of someone showing up at your door, you do court summons through NFT, through blockchain. And I think this is an example of a case where if a company were to develop a protocol or develop a smart contract on whatever chain you wanted to do this on, where you essentially had a nice UI, you could go in, you could create your NFT, custom create it, and then send it away. Like, that is an example of a creation platform. And I think that is something that's being, starting to be looked at right now. Mostly the industry, to my knowledge, has been about creating collections that are very unique, launching your own, 10,000 item PFP collection or what have you, gaining a following. I'm very interested in exploring what other types of NFT creation platforms can exist, and where is there a need in the market for these more institutional players that don't necessarily want to launch a membership club or a PFP club.
Joe, if I'm not mistaken, that summons use case was actually happened recently. Is that correct? UK served via NFT.
Absolutely, yeah. Wow. So someone who had a blockchain address, but it was pseudo anonymous. They didn't know, the court didn't know who owned that public address, was summoned via NFT recently.
Totally crazy that this is really happening today. And pretty much all of the use cases we've spoken about so far are things that are happening currently. We'll talk a little later about the future use cases that we see. Sumit, you want to continue on for us?
Yeah, I mean, I think if you look at let's just look at Ethereum. I'm looking at Etherscan right now, and the number one fee, or gas guzzler, as they call it, the number one contract or address that's guzzling the most gas or earning the most fees is OpenSea. So that really shows across all Ethereum. It's got in the last 3 hours, it's about 12% of all of Ether fees. Uniswap is 2, Tether, go down the list. There's even Gem, which is an aggregator. It just shows what is happening overall in crypto. There's more money going in notional terms through fungible tokens, but OpenSea is actually the top contract in terms of fees. So that's trading. OpenSea is a marketplace. And a lot of what Joe is talking about, that's hot right now, is these collections, the art, the collectibles. OpenSea is one. There's a couple other venues that are popular. Looks Rare, it's kind of similar. X2Y2, these are kind of similar. And I think this is something that, we see in the beginning is like, like these are assets, and people are like, some of the more sophisticated people are like, either they're like institutions that want to collect, they have this mandate to, they're like DAOs, they want to collect different types of digital art or different collections, or they're just genuine flippers. They're just trying to make a profit by buying and selling different NFTs. That's kind of a lot of the activity that's happening right now. What I think is coming up and that's starting to happen is this aspect of financialization. And it happens today in fungible tokens as well. There's a lot of protocols like Aave, Compound, that exists where you can take over collateralized loans, and you can buy and sell. But with NFTs, I think there's a lot of really interesting things that are happening. One, just being able to buy an NFT could be, these NFTs that are the top collections are, the ones that are valued, the JPEGs, the Bored Apes, the Doodles, the CryptoPunks. They've built this community. They have liquidity, but you can actually get value out of these because there's a market. And that's kind of what we're doing today on Parallel. So you can actually buy these with credit. You can get credit instantly. So if a Bored Ape is at 100 Ether, you can get 30 Ether directly just because there's value in it. And this is really how I think we get to maybe this is a potential way that crypto can get onboarded onto a bunch of other use cases. Now, any type of asset that has some value, has some demand, you can actually get the value out of that asset. And you get that value out of the asset by, lending that asset. And that's kind of the financialization aspect, as well as renting, getting some rental income. So these are things that are having fractionalization as well, fractionalizing different assets. And as we think about what we, and the next slide, when we think about what's coming, I think this is only something that's gonna, just more on the finance side, but in addition to trading, being able to access credit, being able to do different financial things with your assets, that's only going to help bolster the different creation platforms and the different use cases. So you can think of the trading and financial pieces as how do we build this infrastructure, and how do we create this kind of new economy. And today NFTs is maybe a very small percentage of crypto in general, but by adding these different solutions and building these solutions, I think it can eventually overtake it. There's definitely the potential there.
Absolutely. Now let's start talking about these future use cases. It really is, as we've demonstrated here, even what's happening today is beyond what most people could imagine. Let's talk about some of these crazy edge use cases. You guys have any top examples you want to bring up?
Definitely. And I just want to leverage what Sumit was talking about really quickly. So essentially, as Parallel.fi scales, as people start using these protocols more and more, credit leads to liquidity. Obviously, credit can lead to, people getting too excited, but it also leads to liquidity, and liquidity leads to greater pricing efficiency. One of the main challenges with onboarding or being able to support NFTs at BitGo is the question of, how are you going to insure NFTs? How are you going to price NFTs? How are you going to make sure that people are comfortable about that? And I think what we have ultimately settled on is, an internal decision, if the NFT isn't liquidly traded, if it hasn't been traded recently, use something like a floor price, use something, where you treat the NFT as more of a fungible asset. But in a world where there is, a healthy credit market and a healthy financialization of the NFT ecosystem, you get more, real-time pricing of all of these different NFTs, and you also increase accessibility to the NFTs. So the more that you fractionalize and the more that you increase liquidity, the greater the access, and also the greater the precision that you can have with pricing. And I think you can apply this to anything. So an example that I like to give is, LPing for a private equity fund. Right now, if you're not an accredited investor, and even if you are an accredited investor, it's really difficult to get into a Blackstone fund or a large private equity fund. This is unfortunate because those funds often benefit from economies of scale, and they perform really well. So it'd be great as like a normal person or as an accredited investor or just like a random person who wants to get into these funds to be able to do so without $10 million, $50 million of capital. And what you could do with NFTs actually is you could fractionalize LP ownership in the equity of these funds and essentially put that on chain, make it liquid, break it down as much as you wanted to. And the interesting thing here is not only would that democratize access or just increase the efficiency of funding mechanism there, but it also leads to real-time pricing, right? So, these funds are mark to market, but right now private equity funds like have the ability to play games. They're in charge of marketing to market. They're in charge of reporting to investors. But in the case of, the Federal Reserve raising interest rates from 0 to 3%, all of a sudden that fund that was worth $1 billion before maybe is worth 500 million now. And that could actually be reflected real time in the trading price of the NFT. And if it's not, that's an opportunity for people who know what's going on to short those NFTs, or if they're undervalued to buy those NFTs. And so like now you have hedge funds playing in that sector. You have, all of these other players being able to participate. And I think to me, that's very exciting because it just leads to greater efficiency and greater transparency. It's really helpful if everyone can see what's going on. Everyone can see these prices real time and kind of let the market opine there. So I'll hand it off to Sumit if he has anything to add, but that is one future use case that I find very exciting.
Yeah, no, I think that's an awesome, like you think of like any of the traditional like financial assets that have some of these problems, whether it's like pricing or access, I feel like, or any type of friction. I think these are like things that I'm super excited about. I do think about like the real power. There's definitely like the rewards aspect, the loyalty aspect, but one of the things that I think is really interesting is just real estate and like real world assets. Today, I think Joe, you mentioned like the deed, the house deed is something like it's a physical paper, but you can imagine where this is like a tokenized thing, like that your house is tokenized. And you can imagine that, if you are an investor and you want to buy a house, maybe you don't have as much capital to buy that house. And you could get a loan, you could take a mortgage, and that could happen a lot more efficiently through like a DeFi protocol, for example, as opposed to like a mortgage lender. Although you might love your local mortgage lender, that isn't the most fun process to go through. So you can imagine a world where you can get a mortgage, or you could actually even like fractionalize that home into multiple pieces and essentially sell, and you have multiple investors buying the same house. And then you think about like some things that you could do with maybe you're an investor, but you don't actually want to like occupy that home and you want to earn some rent. Then you can have a framework where like there's like a rental token, an occupancy token. And that occupancy token is responsible for like paying a certain amount to the ownership tokens. And if they don't pay that certain amount, then their occupancy token, they lose the ownership of it. You can code these different things and just like really recognize these really interesting models of any kind of real world asset. I think real estate is a big one that a lot of people probably have gone through a process of buying a home or starting a business, buying some land. I think that's something that I see as a potential use of NFTs. Obviously, there's a lot of things around the regulated model, a lot of things around security when it comes to these aspects, and I think that's why companies like BitGo that are at the forefront of security and custody, they can partner with DeFi protocols to like build some of these solutions. We do want to enter the regulated market right now. There's a lot of DeFi things that are pretty crazy and wild. I kind of view this as kind of the experimentation kind of time where we're experimenting, we're seeing what sticks. But over time, we'll see things that are like, really improving people's lives, general people's lives. I think as Jenna Eve asked in the chat, how far in the future do you think NFTs will be part of our daily lives? Like, I hope pretty soon. I think it comes down to different people building and thinking about the right solutions. As we move as we move away from like the trading, just focusing on trading and flipping, and more towards building and adding benefits, I think that's where we'll see, this becoming a part of our daily lives. And maybe we won't recognize them as like NFTs. It'll be just something that, just like a better product, a better solution. And you won't really know about NFTs or Web3. It'll just be like part of our daily lives. I see that as a potential future if like we're able to build this in the right way.
Just on the real estate point, it blows my mind that like when you're buying a house, you have to buy real estate title insurance for like the 2 days that it's being transferred, because it's a physical piece of paper that could have like decayed.
Yep.
And that's like thousands of dollars. Like, it's like, why, right? Like, it's not, everyone's like, oh, we need to put, like, it's so annoying to put real estate assets on chain. Like, I'm, like thinking about it, it's like, we're already doing that with pieces of paper. Why is it harder to put it on chain than a piece of paper that could have a flaw in the physical piece of paper? It just, it makes so much sense. It's going to happen. The question is like, when will it become socially acceptable? When will the companies in charge of that, give into it? There's also the component of the companies that provide insurance, like make a lot of money there. So they're incentivized to prevent this, but exactly, title insurance, right? So like, what does that look like in blockchain? You like, if the NFT, if the real estate title is stored in BitGo, maybe your title insurance is $10, and it's really just, can you check to make sure the metadata link is still there, as opposed to what it is today.
Very reasonable point. And I think that to Sumit's point of NFTs becoming a part of our everyday life requires this sort of transition where people don't necessarily know they're interacting with Web3, that they're interacting with NFTs, is extremely important. Email was something that was difficult to use early on. And it's because the building blocks weren't quite there. The foundation for email was not as easy and nice to use as it is today. And people don't know about the protocols going on in the back end of email. They don't need to. It doesn't matter. They're able to use it seamlessly from a nice front end UI. And that's going to be the transition, in my opinion, to mass adoption of Web3. So on that point, I think building blocks, the foundation for this is, how do you protect your NFTs? How do you store your private keys? That's an extremely important aspect of this. Using things like multi-sig hot wallets, cold storage, having message signing from within a trusted party that's storing your keys are all incredibly important aspects of this future of Web3. And that's what we're working on here at BitGo. We've been delivering these types of solutions for 10 years now. It's pretty crazy to be able to say that, but yeah. What are you guys' thoughts on protecting your NFTs, protecting your keys? And I do want to only take a few minutes on this so we can open it up to questions afterwards.
Yeah, I'll jump in here. And I think just to level set the conversation, there's like 3 big categories for how to think about storing your digital assets. First category is self-custody. Like, you're doing it completely on your own. It's probably single sig. You're responsible for key security. You're also responsible for key recovery. On the other side, like a very like white glove, hands-on custodial solution. It's regulated, it's insured. This is the BitGo custody solution. The keys are stored, on air-gapped machines. There are people that you interface with through video call to actually withdraw assets. It's extremely secure. Even you do not have the ability to withdraw those assets on your own. This is actually required for a lot of like RIAs. They have to keep their assets at custodians at a third-party custodian. Then you have like the middle here, which is programmatic hot wallet or self-custody cold wallet. And this is where you use like a multi-sig scheme, so like a 2 of 3 or M of N signing scheme. You have a certain number of keys. You give BitGo a certain number of keys, and then a third party at your discretion can also have, some of those keys as well. So a typical setup here would be you have 1 key, BitGo has 1 key, third party has 1 key. The third party just holds on to that extra key for you in case BitGo, in case you ever want to move away from BitGo, or in case you lose your key. And then you have a relationship with BitGo where the 2 of you sign together. And that's how our programmatic hot wallets work. That's how the self-custody cold wallets work. And that's more interoperable. It's easier to use. It's more user-friendly. Maybe like a good fit for anyone who's hoping to interact within the DeFi ecosystem. But those are the big 3 categories. And I think what's important to emphasize is that if you are purely responsible for your own keys, self-custody over here, whether that's a Ledger or a MetaMask or, you know, using any other product that puts it in your hands, if you lose your seed phrase, you lose your keys, you lose your NFTs, you lose the deed to your real estate title, you lose your social media identity, you lose your messages, you lose your documentation. That obviously is like a horrible situation. No one wants that. And so as we move to greater development of NFT markets, it's really going to become a question of like, who do you use as a self custodial like support, or as an actual custodian, qualified custodian partner to hold on to and manage those keys for you. And so what BitGo does is we offer these multi-sig solutions where there's a certain signing threshold, and you know that you are not responsible for key security, and you're also not responsible for key recovery. We are there for you when you lose your keys. We prevent anyone from taking them. So you maintain your ownership. You don't have to worry about losing your social identity, and you know that your NFTs and all your other assets will be safe.
Absolutely. Sumit, do you want to add to that before we jump to?
No, I think that's like a awesome like solution, because like that's kind of my fear is you know, it's most like it's kind of like a utility thing for me too, in terms of like just trading or interacting with like different membership clubs I'm in with my NFTs. A lot of times like MetaMask is like the standard just because it's the most like Web3 enabled. But I don't like to leave like valuable tokens or tokens that I like value myself. I don't want to leave them in MetaMask, and I want to like transfer them to another device. And it's always like a you know, I could transfer them to like my cold storage, my Ledger wallet, for example. I think there is a way to link MetaMask to Ledger, but I just haven't done it myself. So like, you know, I think like there is this like thing with storage is like, what I really liked what you guys are doing is, you know, the protection. If you forget something, if you forget your password or you forget your secret or your key, like you still have a way to recover. And I think that's something that is scary in general, and for new users, or even for sophisticated users, even for institutions, they don't want to lose their secrets and like be locked out because they're custodying something. So having that kind of support is really necessary. And I think the other thing is just being able to interact with the you know, the Web3 protocols, or the OpenSea is the places where things are happening, the tools that you want to interact with, making sure that you're able to interact with those things. Like I see sometimes I try to use my mobile wallet, I use like an Argent wallet, and I'm trying to interact with Wallet Connect, and it just doesn't work on sites. It's just like doesn't work at all, and it's just like, this sucks. So I think if we can kind of fix these problems of convenience as well as security, we shouldn't have to trade off between the two. We should be able to have both, because, you know, these are, if we want you know, Web3 to be successful, if we want to get the most value out of our tokens or NFTs or FTs, then this is a really essential component.
Agreed. So we have a good question here on what chains are people minting their NFTs. Ethereum is far and away number one. I believe Solana is number two after that. You guys agree there?
I agree. And I think Polygon is the third here. I think the vast majority of volume in terms of, you know, price or value is on Ethereum. Solana is very interesting gaming wise, a lot of gaming NFTs on Solana. And then Polygon is being explored and used more frequently for utility NFTs, you know, ones that you don't want to pay too much for.
Yeah, I agree. And I think this is another thing, like the layer 2, or you know, something that's more efficient. Ethereum has a lot of expensive NFTs, and it might you know, close out some people that don't want to spend as many, just like moving things around. So that's definitely one of the things that might change over time.
Yeah, for sure. I mean, hopefully the ETH2 merger and bringing proof of stake to ETH will lower those fees. But if not, we're going to see a mass migration to L2s like Polygon or other chains with low fees like BSC, Solana, Near, the rest. So talking about the gaming use case again, somebody was asking about royalties and talking about EVE Online, a game with a significant number of in-game assets being used in a TV show like Arcane or something like that. I think that it's something that we're going to have to see moving forward. The fact that it's on the Eternal Dragons roadmap is really cool. I'm definitely going to be keeping an eye on that. I'm curious what the contract of the NFT actually looks like, what amount of royalty they're giving to the holders. Your example of Jinx in League of Legends, everyone can play Jinx. Anyone in a 5-person team can anyway. So what percent of the royalty would you be getting? It's going to be a super interesting question. Should we start getting more rare NFTs where it's not a run of, 10,000 of this for a video game? Maybe there really are only 5 of them in this game, and they're highly sought after. Beyond that, somebody's asking about the idea of, thank you guys in the chat. I think this has been a great discussion. Go into one more thing before we end here, which is the rarity and being able to have this interoperability without having pay to win. Maybe you will need to 100% complete the game before you can actually purchase this NFT. And maybe that's a proof that you need to put forward before you can purchase the NFT, so that you really have earned your way to have the opportunity to purchase this.
Yeah, absolutely. So just on the rarity thing, I personally think pay to win will always exist, but I do think like there will be a nice indie subsegment of games that are like pure, and I will enjoy playing those. But yeah, that's an interesting point
Fantastic.
there.
Well, Joe, Sumit, thank you guys so much. I think this has been an awesome discussion. Definitely excited to continue talking about this with both of you offline and hopefully in public.
Thanks, Aaron.
Cool. Thanks so much, everyone.